Tell me your thoughts on the US data prints and where they take us.
So Friday, non-farm payrolls data came out. It was a strong jobs print, as we expected on Friday. But importantly, wage inflation was lower and the revisions to the wage inflation was lower. This is like a Goldilocks report. I mean, it's well away from Goldilocks, but it's going the right direction. The idea that we can continue to get a strong economy and yet inflation come down. Wonderful story. I went to bed Friday night. That was the message that we were taking away. After I went to bed, ISM came in and said the exact different message. It said it was a terrible shock on the downside, a terrible surprise. Even though prices paid were very high, all the components about the economy were very negative. Yet it was the ISM that it caused a much bigger impact in the market. So the ISM said, oh my God, it's clearly so dire out there. The Fed's going to have to cut rates. Recession's coming sooner than we think. And that's what really drove the dollar to sink and equities to really rally into the weekend. I wake up Monday and suddenly we're conflating those two narratives. We're like, wow, look at that big move on Friday, ignoring the fact that it was the ISM and instead crediting to the idea of this Goldilocks non-farm payrolls report. So I think there's a little bit of a confusion between the price action and the narrative we've backfitted to that price action, and that makes me slightly nervous.
OK, interesting insights. And yes, there was nothing Goldilocks about that ISM data, 49.6, only just below 50, but the estimate was 55, of course. The prior was 56.5. New orders were below 50, and the prices component suggesting inflation pressures continue. So as you rightly point out, a weak data print there. Now, commodities, they're just confused by all of this. What's being flung at them in terms of the weak outlook for the US, the reopening story in China?
Yeah, and I think like commodities, again, seem to be trading unsure about how they're going to be narratives around the rest of the world. So clearly, we're very optimistic about the China situation and every other asset class. In commodities, we seem a little bit less sure. We're not seeing that demand really come through yet. And then again, when you go to the US, we're talking a lot this morning about that Goldilocks jobs report, the fact that we can get jobs growth and inflation come down. That should be a very positive sign. It should be saying that, hey, first of all, the economy is not going to have a hard landing. Wonderful news for commodities. And second of all, we're saying inflation is going to come down anyway. So therefore, monetary policy doesn't need to be as tight. Another reason to be positive commodities. And yet we're not seeing generally at the moment extreme positivity in commodities. We are seeing gains today. It is true. But overall, in the last couple of weeks, they have been very, very soft. So there's a little bit of a disconnect about how commodities, the real measure of real world demand, and the financial narrative seem to be diverging a little bit.
OK, so that's where we diverge. We will pick up on the weakness in the dollar. I know we've got a lot to say about that, and that picks up from Friday's themes, Mark, and I know you'll talk about that in half an hour's time. So let me just ask you about what's been going on in Brazil. You've got a lot of experience trading emerging market assets. The view around Brazil had changed recently on the election of Lula da Silva and expectations perhaps about more government spending, but now something very different to add into the mix with the violence at the weekend.
Yeah, this is really, really quite a shocking event, and I'm trying to work out how to kind of assess it. One part is that we thought we got beyond the political risk. The second part is no one was buying into the Brazil story because of a wonderful political picture. There was always a risk premium there. Sure, we didn't expect this event, but I think that people will pretty soon, after this dies down, if it doesn't escalate, we'll get back to focusing on fundamentals, and they're still quite positive for Brazilian assets.
OK, remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.